Most traders believe they're one good strategy away from being profitable. They think if they just find the right setup, the right indicator, or the right entry, everything will finally click. But in reality, strategy is rarely the thing holding traders back. In this video, I'm breaking down what actually makes a Forex trader profitable and why focusing on the wrong things keeps so many people stuck. Let's start with the biggest misconception in trading. Most strategies work. Sometimes that's the uncomfortable truth. There are thousands of profitable strategies out there: scalping, swing trading, trend following, automation. Yet the majority of traders still lose money. Why? Because a strategy without discipline, patience, and risk control is just a set of rules waiting to be broken. Profitable traders don't win because their strategy is perfect. They win because they execute the same imperfect strategy consistently without emotional interference. The edge isn't the system, the edge is how the system is used. Another reason traders struggle is expectations. Daily profit targets, weekly goals, pressure to make something happen. When traders expect the market to deliver a certain result, they start forcing trades that don't exist. They trade when conditions aren't right. They overanalyze. They enter late. They chase movement. Profitable traders remove expectation from the equation. They don't demand profits from the market. They simply take what the market offers, or they don't trade at all. This one shift alone dramatically improves decision making. This is where most traders really get it wrong. Risk management isn't boring admin work. It's the foundation of profitability. Profitable traders obsess over risk, how much they're risking, how often they're exposed, how drawdown affects decision making. They understand one simple truth. You don't need to win big. You need to avoid losing big. And this is exactly why proper risk management is how traders pass prop firm challenges. Prop firms aren't testing your strategy, they're testing discipline, consistency, emotional control, drawdown management. Most traders fail prop challenges not because their strategy doesn't work, but because they over-risk to hit targets quickly. They revenge trade after a loss, they ignore drawdown limits, they push too hard under pressure. The traders who pass prop firms treat risk like a hard rule, not a suggestion. They slow down. They trade smaller. They let time work in their favor. This same approach is what leads to long-term profitability outside of prop firms too. Profitable traders aren't emotionless, they're emotionally neutral. They don't get excited by wins. They don't panic during losses. They don't watch trades tick by tick. They plan the trade, set the risk, and then walk away emotionally. This habit alone removes fear during pullbacks, greed during winning trades, impulsive exits, emotional interference. When emotions step out of the way, consistency has room to grow. Here's the part nobody wants to hear. Profitability isn't fast, it isn't dramatic, and it isn't linear. It's built quietly over time. Profitable traders don't rush progress. They don't force growth. They don't judge themselves by a single day or week. They focus on showing up, executing well, and protecting capital. Most people quit because results feel slow. Profitable traders stay because they understand how compounding really works. So if you're struggling in Forex, ask yourself this. Are you chasing better strategies or are you building better habits? Because profitability isn't about finding something new. It's about doing the basics exceptionally well.